Welcome to Java. Thank you kindly for joining me. It is October 25th and it is Friday. So I hope everybody is ready for their weekend. We got quite a few things to go over again today, not to mention Tesla making a magnificent show yesterday with a run. But with this, let's get started, as always, in the markets with our main risk indicator. If you're new here, welcome here. Please consider hitting the subscribe and the like if you would, so that this channel can get out there. And I would like to send a special shout out to everybody here that supports every single day. I truly appreciate you. So with this, we'll start with the MMRI as our favorite risk indicator here. 271.4 now has been rising the past couple of days, but very slowly. We're watching the 10-year yield has been extremely volatile the past couple of days. Now, what we had early this morning, we had Asian markets closing a bit weak, but the European markets are closing strong. Now, we watched basically as they are affecting the treasuries as they are doing sell-offs when they need cash, US dollars, for their cycling. So with this, we've got fear greed dropping a little bit farther, showing a little bit more retail dropping out. We are seeing some interesting moves between this. So with this, we always watch what the MMR is based on, is the 10-year yield and the relative strength of the dollar. Now, 10-year yield had a significant drop overnight, basically another more fear buying of the bonds over in Asia, a little bit of a rotation there. We've got a few things going on we'll speak about with that. With this, we are looking at possibly rising again today, which would pressure stocks. Now, right now, we've got a basically mixed board. They closed out pretty well flat yesterday, had some volatility, dropped and recovered, but ended flat on the day. We're watching the futures. It's really not too much off from it. Now, silver really is the only one under pressure that we're watching. This was pullback from a massive run. Now, it could come back a little bit further. If it does, it's buying opportunity, in my opinion. We've got crude oil also making moves. There's a lot of Middle Eastern tension, a lot of things going on there, as well as the BRICS summit in Kazan. So I'll speak more about that in a moment. But this morning, prior to market open, we're expecting durable goods orders, consumer sentiment, and then we're getting a Fed president speaking. As they always do, it's going to be Collins today. And that way, if there's any major moves in the market, they can basically manage it back. So the sentiment right now, the top thing to watch is bond yields, that 10-year yield. It has been volatile. And this is basically in itself a warning flag in the market, showing a weakening in sentiment towards United States debt. So if there is a downgrade or something in the United States debt, that could rock markets. Now, we are also looking forward to the elections coming up. We've got one more full week prior. Next week is also going to have major earnings from large companies. So that could have some individual moves, and those also move the sectors that they're in. The largest one we're looking at really is tech, so the NASDAQ. With this, we've got the gold and silver that I spoke about. Crypto up. So we've got Bitcoin above 67,000, holding quite strong. As long as it stays above that 66, could poise to go from here. We're watching the direction it's going to take. Now, I'm very bullish on it long term. This is temporary price fluctuations with everything else going on and the US elections coming up. Now, the BRICS alliance effect. There were a lot of deals that happened with this. Russia is, of course, hosting this. They made several deals and agreements. They are making a few more announcements today. India is coming out as the wild card, basically, and they all collectively condemned the actions of Israel and what is going on there. So a lot of major effects there. They are basically moving through their own currency and printed a mock-up of this and gave a gift of it to Vladimir Putin as it is. So a lot of alliances there, and the largest second story in that is India getting along with China now. So we've got major earnings next week, pending elections that could really shock things. So with this, we're also looking at European Central Bank looking forward to rate cuts. Now, ECB will announce their rate cut decision. Basically, they're deciding on whether they want a quarter point or half point. Either way, they're going to cut their rates, and this will ease up on the monetary policy for them. How that's going to work, basically, that will weaken their currency, strengthen their stock markets. And with that, the US markets, I expect to take a bit of a hit as money flows out of them slightly. And also the relative strength of the dollar will increase with the euro decreasing. Now, with this, we've got Bank of Japan. You can see how these flows work. Ueda, who is the head of the Bank of Japan, is signaling that they don't need to hike in order to strengthen their currency. He can basically just wait. Time is on his side because basically with European Central Bank, and then it's not being talked about very much, but the Federal Reserve Central Bank of the United States is the week after elections, and they're expected to cut rates also. So if everybody else is cutting, that will float the yen naturally, so they don't have to take action on that. You can see how the action works. With this, alongside the possible rate cut coming after the elections, we've got more spending by the government. We've got White House issuing new debt relief plan. Now, all of this doesn't come from nowhere. They don't have the money. It's not coming from somebody. It's coming from everybody that owns US dollars. This is what inflation looks like before the prices rise. So that when they cancel the student debt, this adds to the national debt because of putting it into the Federal Reserve debt, which is already unsustainable. So we've also got mortgage rates rising, fourth week in a row. Now, despite the cuts in interest rates, mortgage rates rising, this is causing serious issues down in what I like to call the real economy. What they're saying is wonderful economy, because between mortgage rates rising and competition for pricing, this will basically slow the housing market further. That has an effect on what we call the wealth effect. If people feel their houses are worth more, they feel like they've got a way to get out of this debt. When that drops, then that is when they have issues and tighten the belt, stop spending. So with this, the real economy, we're watching more store closings hitting highest level in years. They're blaming it on competition and higher prices. Higher prices is the inflation. It is the regulation that is choking them down. We've got discount chains struggling, discount retailers having issues. We've got more companies closing, shutting down, merging. Spirit stock spiking after the budget announcing it's going to lay off staff and sell jets. Now, if they're selling their inventory, this is model for business. This makes their stock go up. More unemployment, laying off their staff. This is not good for the economy, but it's spiking the stock market. So as investors see this positive for the particular stock, it is killing the real economy. There's major divergence here. So in Florida, the issue they're having with their local housing market, they're going to see theirs decline. And this is because of the damage that has happened recently from the hurricanes. The largest insurance company, it is state funded. It's called Citizens. It is supposed to be a insurer of last resort. Basically, a lot of private insurers have pulled out and they are not paying. So basically, right now, they're going underwater, both figuratively and literally, finding themselves with full losses exceeding their ability to pay by billions with a B, billions of dollars. They're underwater. And this is the state funded insurance company. So basically, the next level up is to go federal. So that's FEMA. With this, I'd like to speak about a couple of positive things. We've got Pennsylvania House of Representatives passing their pro-cryptocurrency bill. It's called House Bill 2481. And basically, they're billing this as the Bitcoin Rights House Bill, support for Bitcoin, transcending traditional party lines, appealing to voters who prioritize economic freedom. So basically, they're also saying that Bitcoin provides a pathway to escape CBDC, central bank digital currencies. So I think this is a major positive move, really supporting the people's side of cryptocurrency rather than the central banks. So I hope that goes through. We'll keep an eye on that. We've also got a modular payment platform, supposedly bridging decentralized finance and traditional finance. Now, if this is true, I have not looked into the actual functioning of this, but the decentralized governance, if they can actually tie in ways to make this easier for people to use decentralized finance, I think this is a fantastic way out. And if nothing else, even if it isn't decentralized completely, it does drive adoption and more awareness, which is really what the space needs in order to be transacting in this on a daily basis. Now, with this, we've got this story: data centers, energy hungry, and employing few people. So why does Ireland? Well, really, it's the world. Why do we need more of these? It is driving not just cryptocurrencies, although I find it interesting that when it was considered for cryptocurrencies, they were considered evil, energy hungry, and looking very negative. But when it comes to artificial intelligence, they're seen in a positive light. So I do see these moving forward. Large sector, this is globally, not just the United States, and not financial advice, but something to look forward to. Not just the data centers, but also the substructures, buildings of these, the systems that go into these, and the power structures that feed these. So with this little back to the dark side, we're watching it. The real economy is basically a war economy. Now we had the United States Air Force again using the B-2 for the first time in combat. Use these words: in combat since 2017, sending a message to Iran. Now, the last time I checked, there was no formal declaration of war towards Iran, yet we used these, saying we, meaning the United States, went over onto their territory and is bombing actively. So I don't know how this is not taken as part in the regular war, but nonetheless, we now have Northrop Grumman, it's another major defense contractor, expected next B-21 contract by the year's end. Now, the United States government broke in debt, can't afford to fund our own government. They're still looking at all of these shutdowns, and yet they're doing major contracts for new bombers so that not for defense, but that we can go over to other territories and bomb on their own turf. So with that, we've got Raytheon is another defense contractor. They just had a major show for their systems and what they call solutions for layered integrated air and missile defense. We've also got new technology, the Wolf X, the Army's next attack dog. Now, these are smaller robotic, basically equipment that they're using so they don't have to use troops because they're running low on these. So all of this money is pouring towards the war effort. Then we've got Palantir. I've been speaking about this for a long time. Palantir is the military artificial intelligence arm. It's not what they're putting forward that they are, but indeed it is what they are, tied in with data. Now the CEO, Alex Karp, talking about their partnership with L3Harris, saying they're better networked and good at understanding basically political environment. Now with this, saying that the United States needs lethal tech to scare China and Russia. Now on this, L3Harris, their stocks rose incredibly. And I just want to bring this forward that this is basically large part of the GDP when the numbers come out for the United States. This is the driver, and therefore, again, from not just the debt side unsustainable, but also the GDP that is supposed to balance that debt is also unsustainable. We've got the alliance of the BRICS balancing this out on the other side, gaining at a very rapid pace, which, by the way, Vladimir Putin, the Russian president, has just announced that he will not be attending the G20 coming up soon. So with this, wish you all a wonderful weekend, wonderful trading day, and until I see you again, stay free.